The price-to-earnings, or PE ratio, is a financial metric that is commonly used by investors to assess the valuation of a company's stock. It measures the price investors are willing to pay for each dollar of earnings generated by the company. The PE ratio is calculated by dividing the current market price of a stock by its earnings per share, EPS. Let's break down the PE ratio with an example. Suppose you are interested in investing in XYZ Corporation, and its stock is currently trading at $50 per share. The company reported earnings of $5 per share in the most recent fiscal year. Now, calculate the PE ratio. In this example, the PE ratio for XYZ Corporation is 10. This means that investors are willing to pay $10 for every $1 of earnings generated by the company. A high PE ratio, such as 20 or above, may indicate that investors have high expectations for future earnings growth. It could suggest that the stock is relatively expensive or overvalued. However, a high PE ratio might also reflect a company's strong growth prospects. A low PE ratio, such as 5 or below, may indicate that the stock is undervalued or that investors have relatively low expectations for future earnings growth. It could suggest that the stock is a potential value investment. However, a low PE ratio may also reflect poor growth prospects or financial difficulties. The average PE ratio varies by industry and market conditions. It's important to compare a company's PE ratio to its industry peers and historical averages to gain a better understanding of whether the stock is attractively valued. Investors often look at the forward PE ratio, which uses future earnings estimates instead of historical earnings. This provides a glimpse into how the market values the company's expected future earnings. Keep in mind that the PE ratio is just one tool among many for evaluating a stock's attractiveness. It should be considered alongside other financial metrics, the company's growth prospects, competitive position, and industry trends to make informed investment decisions. Additionally, different industries and companies may have varying PE ratios based on their characteristics and growth potential.